Hello, today is February 4th, 2017. My last call said if the rally were to continue, we'd have to gap up sharply and overtake this high, which is what happened. During the day, MEJT said here ultimately higher prices would print, which they did. It also has a target of 22.9156. It's optional. If it doesn't print by Monday's close, I would forget about it. Well, we gapped up, rallied all day, and here's our close. We couldn't really close over any of these highs. If the rally is to continue, we should gap up and trade past these highs promptly. Otherwise, it's a pretty negative pattern. Well, back in December, I had a time target based on some work I did of February 6th. That would be Monday. It worked great in back testing. Tomorrow and next week is the day we see if it works in real time. Now, no matter how well things work looking through the retrospectoscope, you just can't assume they'll work in the future. Here's the reason. This is the Gaussian distribution of how things happen based on chance alone. You can see that if you call major changes in trends infrequent events, that the chance you'll pick a major change in trend based on chance alone is pretty small. But if you look backwards and look at all the possible patterns, the chance you'll be able to find one of them calling a major change in trend approaches statistical certainty. So you just can't assume it'll work in the future. Some of you may remember the debacle with the dogs of the Dow. The guy had a system. He came out in the 1990s. He back tested it all the way to the 1920s. It worked great. People invested over $1 billion with a B dollars in the system. And as soon as they invested all the money, it stopped working. The standard answer was once people know about the system, it stops working, and that's completely wrong. The correct answer is if you do things retrospectively, your chances of finding a system that work approach statistical certainty. So what are the chances I'm going to get my February 6th high? Well, I think I have a chance. Here's your stilt. Here's your stilt. Here's a diamond. Now we have some resistance here. Here's your wall. Here's your hole in the wall, a gap. The first challenge of the origin of the left stilt usually holds. So this is a resistance area. Also, if you take the height of the diamond, you get a top around 2302. Typically, you'll get resistance in that area. Frankly, I would like to see that print in the futures market early on February 6th, just to make my thing work. But if it does not print in futures, I don't really care if I miss by a day. There is a chance this is the high, because if you take this point and this point, that works perfectly right over there. Monday's pattern typically tends to hit a low in the first hour and rally all day long. It's usually a positive pattern. If it isn't a positive pattern, you usually find out early with a sharp drop in the first hour of trading. Because of this price target here, which will print 95% of the time, but not 100 Monday, I would like to see a sharp drop at Monday's open, even if we hit the higher price target in the futures market. The ideal situation, which doesn't have to print, is that we undercut this low with a gap at the open, which would mean this whole rally is a false move. Well, if that's going to be a top, we should get some wave count which is compatible with that. I think it's hard to count these waves. I came up with this. Here's 1, 2, 3, 4. This is a possible ending diagonal triangle. If you delve into this and you look at this, you'll see some pretty good Fibonacci relationships. If that's wave C of A, that's wave A at your 78.6%. And if you go through all these other ones, they all work. I don't have one that works for this final wave, but I don't care. The final wave doesn't always work. So Monday should be a day that's pretty interesting. We have an optional but desirable rally to a new high in the futures market. Then a sharp rejection at the open, hitting this price early, and ideally gapping under this one. And if that's true, and if this counts right, that should be the start of a big drop. And if something else happens Monday and we just keep rallying sharply and we get the normal low to high day, a lot of my analysis just isn't going to work. So anyone who wants to trade on it should keep a reasonable stop. So Monday should be interesting, and that's today's call.